If you currently own an IRA, 401k, 403b, or any other type of qualified plan, you have a partner in your plan who retains total control of the plan's assets. This same partner has debt approaching $20 trillion. Your partner's debt is increasing by the sum of $2.20 billion per day. Additionally, your partner has unfunded liabilities for Social Security benefits, Medicare, and prescription drugs of over $100 trillion. Or $154,219 per taxpayer. To make matters more complicated, the Congressional Budget Office estimates an additional $9.4 trillion will be added to the existing debt over the next 10 years. This assumes there are no negative economic events or future involvement regarding extensive military expenditures in the future. The CBO also reports that interest on the debt is becoming an even larger portion of federal spending. Last year, the federal government paid approximately $221 billion in interest. By 2024, interest is projected to increase by more than $876 billion. And soon after, the federal interest payment on its debt will increase to over $1 trillion per year. Again, keep in mind, this represents only part of our national debt. If you include intra-governmental debt, debt owed to government trust funds such as Social Security and Medicare, our national debt is more than 103% of our gross domestic product or GDP. The CBO projects by 2025, it will reach approximately 118% of GDP. Considering this information, you need to ask yourself, what are the chances my income tax bracket will increase in the near future? Or what are the chances Congress will pass new legislation relative to my IRA or 401k? To address this debt problem, Congress and major consulting groups are researching possibilities in restructuring qualified plan accounts, like your IRA or 401k, by forcing a percentage of the plan's assets to purchase U.S. Treasury bonds. Another concept being considered is implementing an excise tax on distributions when the qualified plan's assets equal or exceed a specific amount. This excise tax would be added to your individual tax rate when voluntary or forced distributions are taken from your account. Another concept is nationalizing qualified retirement accounts. Under this program, the government would take control and management of your account, offering a guaranteed rate of return in the form of a government annuity. In fact, a similar concept was introduced on a smaller scale in the President's 2014 State of the Union address through a program titled My IRA. Eventually, Congress will be forced to look for other revenue sources to meet the government's obligations. One of the largest sources of money available to the government, which they have full legal rights to, rests in qualified plans. Plans like IRAs, 401ks, 403bs, 457, SEPs, and other qualified plans are valued at $24 trillion. If you are interested in an alternative strategy which allows you to liberate your hard-earned assets from the government's control, please contact the financial advisor who directed you to this video and ask for a free comprehensive qualified plan conversion and tax strategy report.